What's up everybody, welcome to the Stocks channel. My name is Cory and today in the stock market we had a pullback ever since we hit resistance yesterday and we're right back down to some critical support levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.71% and we're right back down to some very critical support, which is going to be the top of the 20 simple moving average and the 5 and 13 EMA, which are now all bunched up as support levels right there at SPY 366. So for that reason, this is going to be an extremely critical support zone that if SPY does hold up above, we could get another higher low ever since we did get the bounce off 357. And we could continue to march higher towards a resistance trend line right around 378. Now, in the event we do break down below this support zone at 366, we will be looking for a retest of the lows or even possibly that next leg lower, which does match the market structure of the downtrend of lower highs and lower lows. Now, in the event that you're trying to get bullish, you need to see a bounce off support, taking out the previous daily high at 378 and then building up some energy to go battle the big bear sitting up there at SPY 390. So for that reason, there is only really one critical level in SPY that you really need to be paying attention to, and that is going to be this level at 366. Above this level, you can stay bullish, but below SPY 366, you instantly need to get more risk off for a retest of the lows down here at 350. So that is really all you need to know on SPY. Watch that price action at this critical level. And then if we can break above resistance, you're instantly getting a lot more bullish, but you can stay long with your risk level right here at 366 until that level breaks down. And then you either need to get short or get risk off and sit in cash until we can see whether or not the 200 weekly simple moving average will hold up as support. So this is a downtrend until it's not, so we need the bulls to prove everything to us because right now the bears have the advantage of the trend, which is still lower highs and lower lows, which will mean the bulls need to prove the downtrend is ending by breaking out to a new daily high, which is going to be that bullish breakout above 378 up to about 382. The bear market is still alive as long as SPY is below 390, so that remains the critical risk level. On the NASDAQ 100 triple Qs, we were down 0.36%, and the triple Qs have a slightly different look than SPY because as you can tell, the triple Qs are closing below the 20 simple moving average. Now, this isn't necessarily bearish because we are still above the 5 EMA and above this support zone right around 267, but we have a very clear rejection from the resistance trend line at 277, which is a constant reminder that this is a downtrend until it's not, and we are still in the downtrending channel. The triple Qs will need a break above 277 to get out of the downtrending resistance trend line, close the gap just below 280, and get another daily closing high above this resistance zone between 282 to 284, and eventually battle the big bear waiting up there at triple Qs levels of 293. Critical risk levels on the triple Qs will be down here at 267 because below that, you are looking for a retest of the lows right around 258 to 255, and possibly even another leg lower down here at 250. Remember, these are downtrends until they're not, so let the price action prove everything to you and make sure your trade plan is knowing both scenarios and then acting accordingly depending on what price is doing. On the Dow Jones, we were down 0.37%, and the hopes of the double bottom breakout in the Dow Jones is still alive because the Dow Jones is still above the double bottom neckline breakout above 303, which means the Dow Jones could start marching higher towards 320. As long as these Bollinger Bands are continuing to expand, we can see the Dow Jones pushing higher. Critical resistance will be to the upside right around the 50 EMA around 308 and the critical risk level at 312. If the bulls break above 312, the bears are going to retreat all the way back up to the gap fill zone right around 320, which is the double bottom price target. On a breakdown below the neckline at 303, you instantly need to start considering the possibility this is a false double bottom breakout, which means the critical risk level will come down to support around 299 to about 297. Stay bullish as long as we're above the neckline because this is a very valid double bottom breakout, which is a very bullish pattern. On the Russell 2000 IWM ETF, we were down 1.7% with that very clear rejection from the 50 EMA with yesterday's price action and coming all the way back down to critical support at the 20 simple moving average just above 169. You could see a very clear breakout of the resistance trend line, and today is a back test of the breakout as support. So if we do get a bounce off the 20 simple moving average, that will look incredibly bullish for a retest of the high at 176. The critical risk level is 178, so the bulls will need to break above that level, and then this will look like a double bottom breakout above the neckline, which should easily take us up to fill the gap at 188. Remember, these look like double bottoms, so if we're breaking above the neckline, that is going to continue to look bullish. On the ARKK ETF, we were down 4.3%, which is a constant reminder that the ARK ETF is in a very strong bear market, clearly getting rejected from that resistance around 38 and right back down to support around 35. The previous low of support is going to continue to be 33.7, and on a break below that, we could go all the way down to $30. We're not getting bullish until we get all the way back over 41 and eventually back over 47. On the VIX, we were up 0.82% as the VIX continues to close above 30, which reminds us this is still going to be a very volatile market. And I will remind you, volatility does work in both directions. So if the bulls start to crush the VIX, you are still going to get very green up days, which could be up in the magnitude of 3 to 4%. However, with the VIX above 30 in a bull trend, it does favor the bears, and we could still see a spike in volatility if we do reach full-blown capitulation. But right now, I would just prepare for a volatile market and know your risk levels, and then make sure your trade plan is following the price action because it is going to be a very volatile market. On Bitcoin, we are still stuck in the trading range between 19,000 and 20,000, so there's nothing new to report just yet. Remember, a break below 19,000 sends us to 17,000, and a break above 20,000 sends us up to 22,000. On Amazon, we were down 1.11% as Amazon is getting rejected right there at the negatively sloping 20 simple moving average, which is going to be a critical resistance right around 115. On a break below 113, look for a retest of the low at 106 or the next leg lower at 102, and you're getting a lot more bullish if we can start breaking above 121 because we will very likely go fill the gap at 126. On Microsoft, we were down 0.85% with a very clear rejection from that negatively sloping 20 simple moving average of resistance at 237. Above 237, look for strong resistance around 242, and then the 50 EMA around 248 and the critical risk level at 252. To the downside, we have support at 232.8, 225, and 222. On Nvidia stock, we were up 0.7%, and Nvidia is still getting rejected from that critical resistance zone at 122.5, which is going to be the level we need to break above to get bullish for a retest of 135. Below 122, we could retest the lows down here right around 115 and the previous closing low right around 112. On Tesla stock, we were up 0.84% today, and Tesla did have earnings after the bell, so we are very likely going to see the measured move in Tesla with tomorrow after earnings. And this is very likely going to be a retest of 231 to 238 and testing that negatively sloping 20 simple moving average. So remember, earnings means nothing after the bell. You need to follow the price action during the open market hours, and it does look like there's unfinished business to the upside. However, if we do get a clear rejection from this area, look for a breakdown below 219 to take us back down to a retest of support at 209 or the previous daily closing low at 204. Below 204, we're very likely going to get a very quick flush to the downside with the price target at 186.5. On Apple stock, we were up 0.08%, and Apple is right here at critical resistance at 144, which is our resistance trend line and our negatively sloping 20 simple moving average, so this is very critical resistance. If the bulls gap over that, look for strong resistance at 147 and then 150, and if we get rejected from 144, look for a retest of 138 and then support levels at 136 and the gap fill at 133. On the financials, we were down 1.64% with that clear rejection from the 50 EMA, even though price action was getting a little too far overextended above the upper Bollinger Band. Look for possible support right now, right here, just above 31. On the industrials, we were down 0.71%, getting rejected just below the 50 EMA, but still closing above all of the other moving averages, so we still are developing a bull trend. The healthcare sector was down 1.4%, rejected from the 50 EMA, and right back down to the 20 simple moving average of support, which is right there at 124, and we did get a positive bounce back above support. The energy sector was up 2.95%, finally getting that bull breakout above 83, which means we could start marching higher towards 87 and fully closing the gap just below 88. Continue to stay bullish as long as we're above 83 or the risk level at 79. So jumping back over to the S&P 500, without a doubt, this is a very critical risk level on SPY right here at 366, and you can stay bullish as long as we're above that level, but instantly need to get more risk off if that level breaks down. Remember, this is still a downtrend until it's not, even though in the very near term we do have an uptrend. The bulls will need to protect that 20 simple moving average of support. So always be patient, have great discipline, and use great risk management in this very volatile market with the VIX elevated above 30, and you will do just fine trading as long as you have a plan and you are sticking to it. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can find out more about Bank or how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.